Hello everyone and welcome back to Wise Credit Management. In this lesson, we're going to discuss LexisNexis, their insurance reports, also known as the C.L.U.E report, and credit-based insurance scores. Most of Wise Credit Management is spent discussing FICO scores and specifically how to get you approved for a mortgage. But in this lesson, we're going to talk more about how to get the lowest insurance premium possible and how to clean up anything on your LexisNexis reports. LexisNexis is used for so many things. It has a consumer disclosure report that you can order and review for free. It has the comprehensive loss underwriting exchange report, also called C.L.U.E. All of this basically shows information such as property ownership, liens, bankruptcy information that can be used for background checks on rental properties, employment applications, and for your auto and home insurance. So it's a very important thing to understand. Most states allow insurance companies to use your credit report in determining your premiums. So the scoring model for insurance credit scores is similar to the scoring model used by FICO in determining your lending credit scores, but there are several different models available. And with regard to LexisNexis, we are going to cover exactly how to dispute negative information and get it taken off of your LexisNexis report. It's kind of like a credit report, but it has a history of all of the, let's just say your driving violations, many different types of documents are on there, including sometimes criminal history that isn't yours. So we're going to talk about, and in this particular case, I'm going to use myself as an example of how to get things removed from this particular report. So with all that being said, let's get started. And hey, if this is your first time joining us, we're so happy to have you here. This is just a short introduction and a review of the Essentials class. We have several pretty simple goals for the class. Mainly, I want you to understand the principles of wise credit management. My name is Jason Johnson, and while I was an active real estate professional, I focused on first-time homebuyers, many of whom needed help with their credit. Then one day, I believe that God put it on my heart to develop the program that I wish existed for people with credit problems. I know this class isn't the most entertaining, but I believe that it will be the most informative for you. It's completely free to students. It's the most comprehensive program that I know of, and if you pay attention and learn the material, you will be able to build and maintain a good credit score to help you accomplish your goals. I want you to learn how credit really works while being simple and avoiding too much complicated math. It's wisdom that works in the real world. All views expressed are my own and from my experience as a former mortgage professional. Just like your accounting professor won't do your taxes for you, I can teach you how the credit system works, but I can't help you with your credit. On the other hand, what if you do need a professional to help you out? Well, we do have members that can help you. Most real estate professionals can't, or rather shouldn't, try to help you out with your credit because it's just not what they do. You don't really need to understand something as complicated as credit algorithms. You just need to know someone who can understand it. If you need help with getting a good credit score or buying a home, we have a directory of professionals who are ready, willing, and able to help. The directory also has many other types of professionals who you might need along the way. I'm not endorsing any specific company or service, but if that person lists their company on this website, you know they're willing to help you on your journey. And if you don't want to call professionals one by one to explain your situation and see if they can help, you can go to wisecreditprofessionals.com and write one time about the details of your situation, then sit back and let up to 3 of our Wise Credit professionals contact you about how they can help. I show you a lot of screenshots of other companies' websites so that you can see where the information that I get comes from, but the class is considered a new work for education and commentary purposes and therefore does not violate copyright law. Many of the screenshots that I use are directly from the company that calculates your FICO credit score and from the big three credit bureaus. We do offer affiliate links, and I would appreciate if you use them, but I also strongly encourage you to use the affiliate links of the other members. When you open accounts with one of these companies, you'll get your own affiliate links offering either cash payments or statement credit, which could add up to over $1,000. And you can see how easy it is to forward the link to this class as well as your own affiliate links to anyone who might need this class. And if you want to see what new opportunities are available since I created this video, you can go to the home page and click on Options and Opportunities for You. This is where you can find our directory to local professionals and not just someone on the phone offering you a rate they can't actually give you. And you can also find affiliate links to other companies that can help you along your journey. Guys, who wishes I would talk just a little bit faster and make the videos just a little bit shorter? Well, I can. Just go to your settings and adjust the playback speed. Guys, thank you so much, and with all that having been said, let's begin. Proverbs 22:1. A good name is to be chosen rather than great riches. Favor is better than silver and gold. What is a good name? A good name is basically what you would want someone to know about you before you meet. In other words, it's kind of like your reputation. If you look at a resume, it basically contains a work history, and you would use that work history to apply for a job. If you look at a credit report, it basically contains a history of paying debts, and you would use that history of paying debts. If you've paid debts well, then you're going to have a good history of repayment, and you can use that credit report to go and apply for a loan. Well, what's an insurance report? Basically your claims history, and that has a direct effect on your insurance premiums. In this lesson, we're going to get information from several different sources, including CASACT, which by their own explanation is the world's only actuarial organization focused exclusively on property and casualty risks. We're also going to get information from the Insurance Information Institute, and just for short, I'm going to call it III. Insurance Information Institute. Basically, what they describe themselves as is they have 60 years of being the leading independent source of objective information, insight, and analysis to improve public understanding of insurance. So, III. Well, they put out a paper called the Insurance Rating Variables. Now, most of you guys can understand that if you have past accidents or violations, speeding tickets, that kind of thing, that means if you have a history of doing that, that means that you have a higher probability of doing the same thing in the future. And that translates into having higher insurance premiums. Well, there are regulations for the variables that are included in your insurance premiums. In other words, when they set your rates, what exactly are the variables that are allowed to be used to increase or decrease your insurance rate? Well, number one, it has to demonstrate a clear relationship to loss. In other words, like we talked about your driving record, if you have a history of accidents or moving violations, that's going to demonstrate a clear relationship to loss and that your driving record is a variable. Also, miles driven. How many miles do you drive in a year? The more miles you drive, no matter how safe you are, however many miles you drive during a year will increase the probability that you'll wind up in an accident. Also, your age. To put it quite frankly, a lot of us mellow out over the years. So these are variables that demonstrate a clear relationship to loss. Charging based on variables reduces the burden on low-risk drivers. So in other words, the better driver you are, the fewer incidents you have, if any, the fewer tickets, that kind of thing, the lower your premium is going to wind up being. So basically, they charge premiums based on a risk of loss, and that risk is assessed by variables. Well, credit-based insurance scores are basically showing a statistical correlation between how a person manages personal finance and the likelihood of filing a claim. ConsumerReports.org did an article comparing FICO insurance scores. The Choice Point Attract, okay, very quickly, Choice Point Attract is LexisNexis's, basically their FICO insurance score, and Progressive's financial responsibility score. Well, according to this article, the Florida Office of Insurance Regulation basically said that insurance scores predict who will file a claim. And it said that the better your score, the better your financial position, the less likely you will be to file an insurance claim. So what all of this means, and we're gonna reiterate this particular point several times throughout the lesson, that the better your score, the less likely you will be to file a insurance claim. Back to III, the credit-based insurance scores have a highly statistically significant correlation between insurance scores and loss ratio. So basically, the higher your score, the lower the probability of loss for your particular vehicle. And the Texas Department of Insurance did a study that found, and we're going to talk in depth about this study, but they found that it improves pricing accuracy. The Federal Trade Commission says that it provides more accurate underwriting and risk pricing. And it also says that there are many customers that see lower premiums. In fact, according to the Arkansas Insurance Department, they did a study and they found that only about 20% of policyholders had their premiums increased based on credit scoring. In other words, credit-based insurance scores. Now, under federal law, if your credit-based insurance scores results in an adverse decision, you must be notified. And under most state laws, credit-based insurance scores are permitted as a scoring factor. In other words, right alongside your driving history and the miles driven and your age, they can also use credit-based insurance scores. What exactly is all of this? We're going to do a very quick summary of what credit scores are and then relate those to your insurance scores. So according to the Federal Trade Commission, a credit report is a summary of your personal credit history. In other words, a historical document. And a credit score is a number based on your credit history. Well, my own definition of credit scores is credit scores are an objective way to calculate lending risk based on credit history. And according to our friends at Accurint, specifically, a credit score is designed to predict your likelihood of falling at least 90 days behind on a bill within the next 2 years. Now, Experian goes on to say that scores do not consider employment status, income, age, race, gender, where you live. Also, MyFICO, which is the place that we're going to talk about them in a minute, but they also do insurance scores. They say that credit scores specifically don't know your race, your gender, your geography. What I want my students to understand is that anyone can get good scores if they understand and work inside the system. We accept, in this class, we deal with very harsh realities. Oftentimes, we have to be very blunt about certain subjects. And one of the things that I really want my students to understand is that I understand that there is a difference in the average credit score among different races, but that's a socioeconomic issue and not necessarily an issue with the scoring algorithm itself. Do not believe that you can't have a good credit score just because of your race. That's not used as a factor in credit scoring, insurance-based credit scoring. None of that uses your race as a factor. So credit-based insurance scores affect some home and auto insurance premiums. Most states allow and what they call predictive analytics to be used for insurance premiums. Basically, higher credit scores have a lower chance of filing a claim, but that shouldn't affect your life or health insurance. So my FICO does a pretty good job of going through and explaining all of these things, but I'm giving you a pretty good summary here. According to Experian, the credit-based insurance score is designed to predict your likelihood you'll file an insurance claim. Again, we come back to this, whether or not you'll file a claim at all. And there are two main credit scoring algorithms, I guess, used. LexisNexis has the Attract credit scoring model, and FICO Insurance is another credit scoring model. What factors into your insurance scores? Making payments on time, maintaining low balances, in other words, low utilization ratio, well-established credit history, and it tends to frown on new credit. Now, if all those things sound familiar to you, it's because it's used over and over in FICO credit scoring for lending. So often what I would say is that the factors are so similar that it's not really worth worrying about that there are different factors used in insurance scoring. Insurance scoring and FICO lending scoring are so similar that I wouldn't even worry about the differences. They're negligible. But what exactly is the difference between your actual credit scores for lending and insurance scores? Like we keep saying, and I'm just making it very clear. Credit scores predict the likelihood of falling 90 days past due within the next 24 months. Your insurance scores predict your likelihood of filing an insurance claim. That's really the only difference between the two. So like we just talked about, the same factors influence both credit scores and credit-based insurance scores. So if you've taken the rest of the class already, the principles of wise credit management are the exact same. Have low debt utilization, make all your payments on time, at least the minimum payments, and have a long history of paying your credit on time. That's really the main the main factors. FICO gives us a breakdown. Like I said, is this very familiar to 40% payment history, 30% level of debt, also known as debt utilization. 15% is the length of your credit, 10% is any new credit, and 5% is your type of credit or credit mix. Again, this should be very familiar to you guys if you've taken the FICO scoring class. Okay, so let's talk about past insurance claims. This is where you would have had an accident, something would have happened, you contacted your insurance company and put it through the claims process. LexisNexis has what they call a C.L.U.E, C.L.U.E, which is an acronym for Comprehensive Loss Underwriting Exchange. Their C.L.U.E report. I know that sounds a little bit complicated. Believe me, all of these are just different ways of saying the same thing. C.L.U.E is your history of insurance claims. It keeps track of insurance claims within the last 7 years, and it is legally considered a credit report and subject to the Fair Credit Reporting Act. For those of you who've taken the class already, you guys are well versed in this from Lesson 7 and the do-it-yourself disputing class. So you can review and dispute anything on your comprehensive loss underwriting exchange report. In other words, you can get those accidents taken off of your report if they are not accurate. More than 99% of insurers provide claims data to this database, and it's used for underwriting decisions and pricing risk. So insurance companies wind up pulling your C.L.U.E report and reviewing it before they set your insurance premium pricing. Now, there are company-specific scores. Some companies basically use their own algorithm, their own scoring model to determine what your actual risk is going to be. Now, we're going to get quite a bit of information from the Texas Department of Insurance. They regulate insurance companies within the state of Texas. In 2004, they released a study of credit scoring in insurance. They went over 2 million policyholders, and this study was peer reviewed. They involved the University of Texas and Texas A&M, so we know to listen. Anything Texas A&M does, we should pay attention to. And they wanted to point out specifically that insurance companies did not review the details prior to the release of this report. Basically, what they found is as credit scores improved, average loss per vehicle decreases, and as credit scores worsen, average loss increases. Okay, let's take a moment and define pure premium. I'm going to show you how all of this works together here in a second, but pure premium is the average losses, in other words, the cost of claims per insured automobile. So if you get an insurance policy, pure premium is what the insurance company expects to lose on your automobile insurance policy when averaged out over, like the Texas Department of Insurance study did 2 million different policy holders. When your policy is put into an average like that, your policy itself is going to cost a certain amount, which is pure premium. Well, what they found, what the Texas Department of Insurance found, what they did was they categorized people across their credit scores. In other words, down here, number 1 is the lowest possible credit score, all the way up here to number 10, which is the best possible credit score. So this would be in the 850 range, 800 to 850. Well, what they found was the average loss per vehicle. So in other words, when you write an insurance policy, the average loss if someone has an 850 credit score is going to be below $200, down here in the 175 or so range. Well, what happens if someone has a poor credit score? Well, that average is a little bit over $350. So you can see the correlation here that if somebody has a bad credit score, they are more likely to cost the insurance company money. Now, one of the things that I talk about a great deal in Wise Credit Management in the 10 lessons is you really do need a good credit score. If you don't have a credit score at all, it's going to place you in about the same range as the bottom 30% or the bottom 30% of credit scores. So in other words, not having a credit score means that they will price you in the approximate worst 30% of credit scores. So not having a credit score at all will place you in the bottom 30% of all credit scores when it comes to insurance premium pricing. So that's always worth mentioning. Good credit scores are good for you. Now, there are some companies that use their own scoring system. And according to the Texas Department of Insurance, companies that use credit scores must file their model with the Texas Department of Insurance. And for those of you who have been following along and taking my class, I think all of you know where this is going. They specifically say on their website to request a copy of a company's insurance model, send an open records request. Well, guess what I did? Yep, I sent an open records request. Now, this is the actual email, although it's not the actual open records request. I had to go back and forth several times about PGC Holdings, but I asked for the credit scoring model used by Progressive Insurance, Allstate Insurance, State Farm Insurance, and PGC Holdings, also known as the General. Now, I'm not sure how familiar anyone outside of Texas is with the General, but it's advertised as a guy riding around in a tank. And it also has, I know that Shaquille O'Neal did celebrity commercials for them. So the General is actually called PGC Holdings. Like I said, I did an open records request and I'm going to show you guys what I received back. Progressive didn't really send me much of anything. Actually, this comes from the Texas Department of Insurance. But Progressive basically has an Excel spreadsheet saying that they did file, but I did not get their scoring model. State Farm, on the other hand, did send their credit scoring model. Now, in this class, I don't like getting into the specific numbers because it adds to confusion. This class is more about principles than the specific statistical analysis. You guys can do an open records request and take a look at all of their variables, but as you can see, the State Farm, okay, so State Farm credit only model B. The way I would explain all this is to say that this might be something similar to what we think of as FICO 8 versus FICO's 2, 4, and 5, which are the mortgage credit scoring algorithms. This is their insurance scoring algorithm, and they take into account inquiries, public records, revolving trades, average number of months open, all of those things. And you can see the list goes on, and their specific the specific numbers that they associate with each different factor. So that gives you an idea of what State Farm will give you. They use all of these in their own scoring model in order to come up with an insurance premium for you. And again, we're talking about the general. But what they submitted was basically saying that they use Checkpoint Inc. In other words, LexisNexis's Attract 3.0 as their credit scoring model. So all of this, guys, please don't get too confused. All of this comes from one place, LexisNexis. It's their credit scoring model. So that's what the general uses. Well, they also sent me this, and what I appreciate about this, they said, hey, look, we use the scoring model that comes from LexisNexis. But what LexisNexis does is gives us a specific score, and we relate that to loss ratio and assign what they call a star level based on the pure premium of the class. Well, we're going to talk about all these in greater detail. So the Attract 3.0 graph basically divides people up, and you can see the specific categories here from 202 to 509. What you get is a 1.0, okay? All the way down here to 711 to 992, which is a 0.65-ish, okay? Basically, my way of explaining that is that this is the worst credit scoring that they're going to give you, and this is the best credit scoring that they're going to give you. So in terms of the scoring model, this is the best. Well, what do they use these lines and these bullet points for? The 0.65 that's all the way down there at the bottom. Well, they give you a discount of 0.65 because you have this really good score. So the credit scoring model that LexisNexis comes up with puts you in somewhere in these ranges, and they'll give you, if you get in this range, they'll give you a little bit more than 0.65, or in other words, a little bit more than 35% discount from someone who has the worst score. So having a good credit score and a good insurance based credit score is a really good thing for you to have. It's a 35% discount from somebody who has poor credit. And they also went so far as to tell us what their pure premium is. So in this category, this worst category that we were talking about, that's a 1.0, there's no discount for this category. $379 in pure premium, as opposed to all the way down here, which is the best scoring that you can have. What they factored was that there's a $240 pure premium per automobile insurance, per car that they write insurance on. So basically, you guys can do the numbers over here. As your credit score goes up, the pure premium that they're estimating that you're going to cost them actually goes down. So that translates into lower premiums for you as your scores go up. So that gives you a very brief and hopefully not too complicated rundown of how insurance credit scoring models work. And Experian talks about the two different main credit models, LexisNexis Attract, which we just saw, and the FICO credit scoring model. And as we've reviewed before, these are the numbers for the FICO insurance scoring model. ConsumerReports.org, remember they did an article that compares FICO, Choice Point, and Progressive's financial responsibility score. And in this same article, Florida's Office of Insurance Regulation says that insurance scores predict who will file a claim. And the better your score, the better your financial position, the less likely you are to file an insurance claim. Interestingly enough, at least it's interesting to me, they don't discuss how much that potential claim might be. And in that same article, they went through and compared different variables among and how those variables impact each different credit scoring model. So inquiries. Now this is where you go and apply for a new line of credit, maybe a credit car loan, something like that. This is what's called a hard inquiry. Well, as we know, inquiries affect your FICO for the first 12 months after the inquiry. They stay on for 24 months, but they only affect it for the first 12. What about choice point? An inquiry will only affect your choice point for the first 6 months. And progressive, now this is kind of interesting. Progressive, if you have 5 or more in the last 24 months, that's when that variable affects you on the progressive scoring model. New accounts, the choice point is affected by 1 in the last 24 months. Progressive, it's 3. And we talk in great deal about how the FICO scoring model gets affected by new accounts in the Wise Credit Management lessons. So that was FICO. Well, what about LexisNexis's Attract? They classify applicants according to risk potential, which leads to improved underwriting. Underwriting is basically risk assessment. Now, it's not easy to find information on the Attract 3.0 model. What I did, and you guys can see up here, I went to Google and wound up finding this CAS Act. It is a PowerPoint presentation that's on their website, but done by LexisNexis. So let's go through that. Like I said before, CAS Act is the world's only actuarial organization. So basically, they're presenting this from LexisNexis. Credit-based insurance scores provide an objective, consistent, and effective tool that uses prior claims to estimate future claims. The data that's considered is the same basic factors as credit scores. In other words, how long you've had credit, the number of accounts, and the types of accounts that you hold. The indications of recent activity, such as inquiries and new accounts, the degree of utilization or your utilization ratio, and payment history. So all of those are factors. It uses basically the same same factors as credit scores, but what's not considered, again, is gender, marital status, address, occupation, inquiries made for account review, promotional, or insurance or consumer disclosure purposes. Now, that is a long way around to saying soft inquiries. So, hard inquiries are when you apply for new debt. A soft inquiry is when let's just say for account review, let's just say you've got an account with Discover and they pull your credit report once a month, but it's not for new credit, it's just to monitor to make sure your financial position hasn't changed, or if it has changed, to determine if it's for the better or for the worse. Promotional, I'm really opposed to them selling your credit scores for promotional purposes, but this is when a credit bureau sells your name and address saying that you fall within the range of 700 to 750 in this zip code. So somebody can send you a pre-approved credit card offer. or insurance or consumer disclosure purposes. So when you review your own report, that's not considered in the insurance model. What about this? Multiple inquiries for auto finance or mortgage finance when made within a 30-day period. Well, what does all that mean? Now, I did a pretty detailed discussion of this particular issue, but basically, this is called rate shopping. When you go out and you try to buy a car or you try to get a mortgage, oftentimes you'll apply with more than one company and they will pull individually, they will pull a different credit report for you. Most people think that if a auto finance company pulls your credit 4 or 5 or 10 times, that affects your credit score every single time. Nope, just the one time. So multiple inquiries that basically fall under rate shopping, they actually aren't considered at all in this. And then collection items designated as medical. So all of those things are not included. Historical insurance losses, basically the insurance model, while it's very similar, they want to make sure that you know that it's not the same as a financial model, because insurance models are developed on historical insurance losses, and they try to rank order claim frequency or a similar metric, and insurance scores are not as dependent on derogatory behavior. On the other hand, like we talked about, financial models are developed on bad debts or 90-day plus delinquencies. How likely are you to fall 90 days behind in a debt in the next 2 years? Financial scores rank order the odds of credit bads, in other words, delinquencies, and the scores are more sensitive to credit delinquencies. So these are not as dependent on delinquencies, and these are dependent on delinquencies. And one more thing that we want to emphasize, LexisNexis is a CRA, in other words, a consumer reporting agency under the federal law for the Fair Credit Reporting Act. So you have the same rights to see your credit report and dispute inaccurate information as you do with the other 3 main credit bureaus and all credit bureaus. So I just want to emphasize you have the same rights. In Deuteronomy 15:1, it says, "At the end of every 7 years, you shall be granted a release of debts." Well, that's biblical law, but how does that translate into what we're talking about now? Well, biblical law was based with Jewish tribal society. They basically made loans to poor or desperate people, and the way that they saw it is debt shouldn't be a lifelong burden. Now, in contrast, US law, obviously for American society, we see lending as a profitable business, but we also created a statute of limitations for the amount of time that you can have to sue someone for bad debt. So there are very serious similarities between biblical law and US law. Now, a quick recap of several of the laws that affect what we're doing here. The Consumer Protection Act is made of several different laws, one of which being the Fair Credit Reporting Act, FCRA. That governs credit bureaus and establishes consumer rights to fair and accurate credit reports. And here we can see an actual copy of the Fair Credit Reporting Act. Requirements relating to information contained in consumer reports, information excluded from consumer reports. And you can see bankruptcy, 10 years, and tax liens and all that. Well, the very next page, we're going to go from 25 to 26, the very next page, included in that things to be excluded is accounts placed for collection or charged to profit and loss, in other words, charge-offs, which antedate the report by more than 7 years. So this is where the 7 years rule comes in. Page 26 of the Fair Credit Reporting Act specifically says that not to report things that are over 7 years old except in certain circumstances. So late payment history and collection accounts can generally only be reported for 7 years. Now, there are exceptions. Please see Lesson 7 for all of those. We're not going to discuss all that here, but there are definitely exceptions to the 7-year rule. Under the Fair Credit Reporting Act, you have the right to dispute inaccurate information, and disputed information requires an investigation for accuracy. You also have the right to place a free credit security freeze, and fraud alerts get extended for 1 year. The Consumer Finance Protection Bureau. This should be one of my favorite places, but it's just not. Basically, what they do, you can complain to the Consumer Financial Protection Bureau about something that a company is doing. If they're falsely reporting things, you can complain to them, but really what they do is set up a dialogue between you and the company, and they monitor the statistics of how many complaints they get. In a different lesson, I discuss how they get 10,000 different complaints per week. So this particular bureau is worth knowing about. And if there's something wrong, if LexisNexis doesn't appropriately handle your disputes, then yes, you should absolutely contact the CFPB. But whether or not they'll actually do something about it is another story. This is what we all came for. LexisNexis, also called Sage Stream. Guys, again, I know it gets confusing with all the little names and Attract 3.0 and everything. And then here we introduce another one, Accurint Report. The Accurint Report provides information mainly to debt collectors. Well, we're going to see here in a minute that the reports that they keep on all of us have things like, obviously, your name, your telephone numbers, your email addresses, even colleges that you went to. So they have all of this information. LexisNexis keeps this detailed file on you. Well, what happens if somebody steals your identity, goes out and starts charging things to your social security number, then doesn't pay them? They go to a debt collector. A debt collector buys this Accurint report, which contains not only the bad telephone number that was used for fraud, but also your good telephone number. So they've got all of a sudden, the debt collector has your good telephone number. They call you and say, hey, you owe this money to a company you don't have any business with. Well, no, I don't. And they say, yes, you do. It's under your social security number. Well, how did that company get your telephone number? Probably from here. So anytime, the moral of this story is, anytime you get debt collection phone calls or letters from companies that you don't recognize, they are probably giving you a pretty good heads up that there's something wrong that you need to check out. And hopefully, based on how I present monitoring your credit reports, hopefully you guys are monitoring everything so that anytime a new account pops up, you'll automatically know to dispute it and get it taken off. But that's what the Accurint report is for. Now, the Comprehensive Loss Underwriting Exchange report provides the insurance risk scores, and really it provides the information for those scores. Your consumer disclosure report is what they're willing to give you about all the information that they have on you. In other words, it's compiled, it's everything that they've got. Here's what we've got on you. The information includes, and I know this from my own, we're going to take a look at mine here in a minute, but we're not going to take a look at my report, but we are going to take a look at how I disputed things off of my report. The information includes real estate transactions, every property that I've owned, liens, judgments, bankruptcy records, historical addresses. I had addresses and phone numbers that were on there since I was a child. So these phone numbers, email addresses, this one really upset me. And we're going to talk about that here in a moment, but they actually had criminal records on mine with someone else's middle name on it. So Anyone who has any common sense knows that that's wrong, but they still report this criminal record. Now, what happens when if I were to go and try to rent a property from someone? Well, they would pull this up and think that I have a criminal record even though it's someone else's middle name. What does that mean for me? Well, I might get denied a rental application because there's a criminal record on my CDR that I didn't even know about, that I had nothing to do with. Well, that's why we're here, to dispute all that stuff off. So bad information in these reports can increase your insurance rates or cause collection companies to pursue you. And you can order your CDR from LexisNexis and dispute information because of the Fair Credit Reporting Act. Well, how do you get a hold of your consumer disclosure report? You can request it online or by mail. You have to include your IDs and everything. It takes about a week, and you get a letter from the Consumer Service Center. They're in Atlanta, Georgia. So you get this letter, and it contains an exact website address and a PIN, a personal identification number, which opens in a PDF file. It opens your CDR, and mine was 168 pages. In those 168 pages, it turns out that I had an alternate life. There were accounts that weren't mine. Someone made a fraudulent driver's license and used my driver's license number and my birth date. They may very well have had the same birth date, but they used my driver's license number and my name, but apparently didn't have my middle name. So that was reported incorrectly. But basically what I'm doing, and I want to use myself as an example. I've been through this, and if you go over lesson 9, you'll hear a much more detailed story about it. It was a very difficult thing to have to deal with, and my lawyer, I hired a lawyer, didn't even know how to deal with it. So in lesson 9, I teach you guys how specifically you can deal with identity theft and fraud. But for this class, we're just using me as an example to deal with LexisNexis. So I've got information on my CDR that's not mine. There's a criminal history with a middle name that wasn't mine, and addresses and phone numbers, etc., that weren't mine. Well, we keep saying under the Fair Credit Reporting Act that I can dispute all of that. Well, how do you dispute all that? You'll remember from the Wise Credit Management lessons, Rebecca. Now, I use stock photographs to illustrate cliche problems that real people are going to have when they take this course. I invented a young woman named Rebecca. I just gave her a name. She's a young college student building credit with one derogatory that's not hers. And we went over in detail how to dispute that in lesson 7. Basically, we can use the same exact format that I gave Rebecca to use to dispute that one derogatory that's not hers. So let's take a look at that. We can use the sample FTC letter from this, comes directly from their website, which basically says you can read over here your name, your address, your date, and then you're disputing this to LexisNexis and their address. And I'm writing to dispute the following information, this item, and you define the specific things that you want to dispute. And you also want to enclose Social Security card, driver's license, bills, anything that they ask you to make sure that it's you. Don't make the mistake of not sending this stuff thinking, oh, well, they'll trust me that it's me. No, that gives them a reason to deny your dispute without even doing an investigation if you don't include all of the bills, the bank statements, the Social Security card, all that. When you dispute things, and you send that all with in certified mail with a return receipt requested. For those of you who took lesson 7, you know how much I love that. So here's what I did. Now, up here would be where I put LexisNexis and their address and my address and everything. It had sensitive information, so I didn't screenshot that, but this is an actual screenshot of the Microsoft Word document that I just printed this straight off that said, please place a security freeze on my file, and I've attached the security freeze request form. So my LexisNexis file is frozen. I've made a note on this letter of mistakes and printed a copy of each page that contains errors on my CDR and circled every error. Please remove the erroneous records from my file, from your file on me, because they are not accurate. Notice I did not say that I'm going to prove all these things are inaccurate. The burden is on them to prove all these things are accurate. Well, do they want to do that? Oftentimes, they just want to get through these disputes as quickly as possible, and I doubt that they even do an investigation. Well, one thing, and like I said, make sure and include copies of your ID and everything when you dispute this stuff. One thing that I wanted to point out, they gave me a hard time about getting my CDR because I didn't include my bills, or one of my bills or something. I think that what happened was it wasn't current. It wasn't within 60 days of when they got it. So I was upset when I wrote this, and since I've calmed down, but I wanted to just use this. I left it in here to illustrate the fact that this is a very upsetting thing to have to deal with, and don't be too down on yourself if you get frustrated, if you deal with them telling you no for no reason. It happened to me on my own dispute, trying to get them to remove someone else's middle name off my report. So I went through great difficulty with LexisNexis. They're not my favorite company, but I did send this letter. I did send a list of all of these errors. I included a printout of their report, circled every error, wrote a letter and listed out 2 pages worth of errors, 44 in total, and sent that in to LexisNexis. Well, let's find out what happened. So on February 8th, I sent the first dispute package. Okay. On May 3rd, I had to go back and send the exact same package with an updated letter. Well, remember, I send stuff with certified mail delivery, the signature card. I mailed it on February 8th, got it back on February 5th, or the card is dated February 15th. So I know and I have legal proof that they received this. So what does that mean? Well, when I go back to dispute this again, I have proof that they've already had this for more than 30 days. Well, what happens on May 3rd is I sit down and write a letter, and I sent them the same package back, but I wrote on it, I have not received a response. You have had the legally allowable time to investigate my disputes and provide the results of your investigation. So they legally have 30 days, and it could be extended to 45, and then they get a few days to, but this has been since February 15th that they've had this, and they haven't responded by March 3rd, or by May 3rd, I apologize. So it's been several months. What I said was immediately, and I changed the tone of my letter. I dispute these, please remove them. No, no, no. Immediately remove all disputed records. They don't even get to investigate it anymore because they've let the legally required amount of time pass in which they had the opportunity to investigate and provide me with the results of their investigation. They are required to remove all these records. And for reference, I'm including my previous dispute letter and a copy of the card that you guys signed for on February 15th. All of that is a long way around to saying this. On May 3rd, I sent that second dispute package. May 13th, LexisNexis responded with another CDR, and I opened it. The errors weren't there, but they didn't say anything about an investigation. They didn't say anything about where the information came from. They didn't validate anything. They just removed everything that I told them to remove. So all of that is a long way around saying yes. Number one, disputes work. Number two, you really need to remove this stuff, because what happens if you go to apply for something and it says that you've got a criminal history? What happens if all of these things are on there and you wind up paying, let's just say 20, 50 bucks, $100 more per month in insurance than you should? So this actually can cost you money. It can cost you the ability to live in the home or the apartment that you want to live in. This has serious ramifications. And like I said, LexisNexis and I had a fight, and I followed the legal disputing process, and they finally removed all of that stuff. So I wanted to make sure all of you guys know that this is possible and it works, and I'm using myself as an example. So now we're kind of doing a quick recap. The factors that are used to determine the price of an insurance policy: your driving record, how much you drive, location, zip code, age, gender, your car. The type of car that you drive matters, and your credit in some states. Also, they look at your claims history from a C.L.U.E report. It's kind of like a credit report. The date of loss, the type and amount paid, claims that were denied. This is something that I wanted to mention to everyone, is that they are allowed to price your insurance even if a claim was denied. So in other words, if you made a claim and they said, no, we're not going to cover that, they can still increase your premiums because you made a claim, but it didn't cost them anything. Well, what if you call them and say, hey, this thing happened, is the damage covered? They could actually increase your premiums just for calling and asking if something is covered. That drives me crazy, but according to Forbes, that's something that they can do. So these C.L.U.E databases are important. And just to wrap up, LexisNexis is used as a source for background checks, tenant screening, employment screening. Guys, this is important, and it does affect you in real life. Maybe not every single day, but if you're paying more in insurance premiums than you should, that's taking money out of your pocket that you should be using to pay down debt or save for retirement or buy a house. So LexisNexis has no problem reporting a different middle name, a middle name that it knows isn't yours. They'll still report this as being part of your file and cause you hardship unless you get a hold of your CDR and dispute all of the negative information that isn't yours. And remember from Proverbs 3:5, trust in the Lord with all your heart. In this class, I've done my best to present you with what God would want you to know about all of these topics in order for you to make the best decision possible for you and your family, and how to manage your credit wisely. And you know I really take this verse to heart. Sometimes God provides people to help you when you really need it. Our professional members participate in wise credit management to serve you by doing what they do best. And remember, you can watch these videos online, but you should also find a local meeting to come and share your difficulties and also your successes. Remember, we celebrate success. I tried to make it easy to find local groups and local professionals on wisecreditmanagement.com. You know, back when I was younger and just starting out, in fact, it was before I became a real estate professional, I found a house that was a really good deal, so I put it under contract. It was being sold by a couple that was getting a divorce, and it needed a lot of rehab work. It was a really great deal, and I had a pretty big down payment. So I went down to my bank, and they actually said no, and the guy who turned me down was actually kind of rude about it. Luckily, I didn't give up, and I found a different bank who would do the loan for me. But while I was building this class, I decided I wanted to make it a lot easier for you to find somebody who can help you. All you need to do is type in some details about your situation, and you can have up to 3 professionals contact you about how they can help you. So whatever your situation is, maybe you've got a rehab that you want to do, maybe you want to get an FHA loan, but you've got bad credit. Whatever it is, you can enter some details about your situation, and we'll help you find a wise credit professional to help get you approved. Well, what if you want to find a great deal like I found, but you're not sure how to go about doing that? Well, what you need is a buyer's agent. What you should do is enter in what you're looking for, and we'll help you find a local real estate agent that can help you find the deal that you need. Just type it in, and we'll help you find a professional that'll work for you. And of course, you need insurance, but really what you want is the best coverage on your home for yourself and your family. And guys, don't be like our friend Charlie and have a major health problem without life and health insurance. Especially if you're buying a home and you have a family, please contact an agent to get yourself proper coverage. And guys, if you have to make major decisions about your retirement account, especially if you're going to withdraw money for the down payment, please talk to a certified financial planner. Also, if you're a freelancer or some type of gig worker, please contact someone about getting a Roth or a self-employed retirement program started. And guys, if you're behind on any of your bills, maybe late fees are being added onto your account, maybe you're considering bankruptcy, please contact a certified credit counselor about a debt management plan to see if you qualify for Chapter 7 or if you need to prevent foreclosure or automobile repossession. It's time to talk to a bankruptcy attorney. On the other hand, consumer protection attorneys specialize in the Fair Credit Reporting Act and suing for violations, so they can actually wind up getting you money out of these companies that are harassing you. And credit repair organizations can help you by professionally disputing bad debt. Many of them are former or even current mortgage professionals who know the laws on disputing and how to get things removed from your credit report. And finally, if you need a reliable and inexpensive car like our class mascot, the Golden Nugget, then you should contact one of our dealers who can help you find what you need. And what's the homework for this class? Goodness. This is directly from lesson 9. I can tell you firsthand, it does feel like getting punched in the face or in the stomach if you find out that somebody else has been using your credit report or putting criminal acts against you and against your background so that people think that you're out there with a different middle name getting tickets and everything. So guys, for your homework, have you reviewed your LexisNexis consumer disclosure report? And if so, was there any erroneous information that affects your insurance premium? Guys, I can't explain it enough. Dispute anything that's not yours. And it's a pretty good idea to freeze your LexisNexis file. Always document your journey, especially when you're disputing things. You need to have a file on hand with everything that you send to these bureaus, everything that you can get from them. Anytime you communicate with them, write it down, print it out in an email, do whatever you need to do, but keep all of that in one place and create your own success story. Like I said, we celebrate success. Join our community. I try to be in all of the more relevant social media, the social media apps that are out there. We try to have groups everywhere that you would need one. And if you found us on YouTube, please like and subscribe. Guys, do you know anyone who needs this? I've made it pretty easy to be able to share this particular thing, and everybody knows how to share a website in a text message. Do you know anyone who needs help with Wise Credit Management? Just send that to anyone who might need help. In this class, we focus on overcoming obstacles. We focus on getting where we need to go. First, get started, develop your goals, and then apply the knowledge and wisdom that you gain from this class to help you solve your problems. Guys, to wrap up, remember, if you haven't taken Essentials of Wise Credit Management yet, that is a good place for you to start. But I hope that this class has helped you understand the LexisNexis version of your credit reports, that you understand your C.L.U.E better. And I hope that for those of you who need this, I hope that you wind up with better credit and better insurance rates and better background checks, a better place to live. I hope that this class makes you better. May God bless and have a great day.